Now, even though I'm still a huge fan of the JP Morgan NASDAQ Equity Premium Income ETF, ticker symbol JEPQ, and I've held on to JEPQ for several years now, got paid dividends every single month, and even seen some upside from where I bought into. I will be honest and say that there are some issues when it comes to JEPQ, or maybe even better put, there's other competition these days that also offer NASDAQ 100 exposure through a high income strategy. Now in this video, I want to talk about JEPQ a little bit deeper because again, there are a lot of investors that are still confused about this ETF and how it really does what it does. Then later on towards the end of the video, I'm going to share with you guys some of my other favorite NASDAQ 100 high income ETFs. And I even want to rank these ETFs from my favorite to least favorite for you towards the end of the video. All it to say that if you hold on to JEPQ or maybe have thought about it, you're definitely going to want to stick around for this one. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now this was an awesome article I came across on seekingalpha.com or from the Macro Girl. It's a really good breakdown and I want to share with you guys sort of the untold darker side of the ETF JEPQ. It says the JP Morgan NASDAQ Equity Premium Income ETF manages to produce an 11% yield with no return of capital. ELNs are used to produce this yield, but how effective are they? This article will explore the often overlooked area that concludes the use of ELNs is not a very efficient use of capital. It says the JP Morgan NASDAQ Equity Premium Income ETF JEPQ has many attractive elements, exposure to the most successful stocks and sectors with reduced volatility, high income, and capital appreciation. Impressively, the 11.4% dividend is achieved with no return of capital, which is a feature of the NEOS funds like the NASDAQ 100 High Income ETF QQQI. Exactly how this is achieved is, on one hand, clear through the holdings in equity-linked notes or ELNs, but also somewhat opaque. It is very difficult to calculate how effective these ELNs are and how exactly they operate. Most articles I've read skim over the subject, and I can see why. After 3 days of research, I still do not fully understand this part of JEPQ's portfolio. In any case, I will share what I've learned, and perhaps knowledgeable readers or viewers of this video can fill in the gaps. I told you guys this was going to be an interesting one. First off, the easy bit. JEPQ invests around 85% of its assets in common stocks that correspond to the NASDAQ 100. The prospectus states the fund is actively managed and includes a detailed description of its stock selection process. Now, in managing the equity portfolio of the fund's portfolio, the advisor employs a fundamental data science-enabled investment approach that combines research, data insights, and risk management. The advisor defines data science as the discipline of extracting useful insights from collections of information, and the advisor utilizes the insights as part of its investment process. The advisor utilizes proprietary techniques to process, analyze, and combine a wide variety of data sources, including the advisor's multi-decade history of proprietary fundamental research, company financial statements, and a variety of other data sources that the advisor finds relevant to conducting fundamental analysis. It then says, it sounds impressive until you compare the top 10 holdings to the NASDAQ and realize they are almost the same. The weights are lower in JEPQ as it's around 85% of invested in equities. Some of the proportions between stock weightings do differ slightly, but for all proprietary techniques apparently employed, the result is disappointingly similar. Now looking into the dark side, QQQ has a 30-day SEC yield of 0.62%, so it is in no way a consideration for income investors. JEPQ's magic is to keep the strong performance of investing in the NASDAQ 100 companies, but also provide a high monthly yield. The easiest and perhaps most efficient way to do this is to simply return capital each month or ROC, but this is considered bad yield, and as it cannot be recorded as income in financial statements, it would not be reflected in the SEC's now standard 30-day yield calculations. It has a 30-day SEC yield though of 0.23%, as nearly all of its distributions are funded by return of capital. JEPQ has found a way around this and is currently listing the unsubsidized 30-day SEC yield at 15.26%. The yield is not always this impressive, and higher volatility levels boosted the monthly distributions shown above. Over the long term, the trailing 12-month yield averages out to 11.3%. Even so, JEPQ clearly manages to create a substantial dividend from its investments in equity-linked notes. In the latest annual statement, 84% was invested in stocks and 15% in ELNs. At least 1% in other securities, mostly money market funds, which is likely where they park the inflows yet to be deployed into stocks and ELNs. Now, because of JEPQ's use of ELNs and the fact that JEPQ does not offer as much return of capital as other NASDAQ 100 high-income ETFs have been doing so far, names like the NEOS NASDAQ 100 high-income ETF have been getting a ton of attention, especially for high-income investors that want NASDAQ 100 exposure like myself. Also, names like the Goldman Sachs NASDAQ 100 Premium Income ETF or GPIQ also offer a nice portion of ROC and also offer the potential for some upside because of its strategy. Now, with all that said, I do still plan on holding onto JEPQ in my portfolio as of right now, but would actually consider selling it off for some more tax efficient options that offer more or less the same exposure. Not to mention, as of right now, if I were to compare GPIQ next to QQQI and JEPQ, all three of these names offer NASDAQ 100 exposure and high monthly income anywhere from say 10 to 15% per year. I would have to rank these three names in my humble opinion, and I would love to hear your guys' opinions down below, with the NEOS NASDAQ 100 High Income ETF being number 1, GPIQ being number 2, and then JEPQ falling in last place, at least out of these three. But it's not only tax efficiency, it's actual total return, which is making QQQI a better option for me moving forward. If you look at the performance over the last 1.36 years, and we compare the NEOS NASDAQ 100 High Income ETF next to JEPQ, the NEOS ETF is offered a total return of around 24-25%, where JEPQ is offered around 18.5%. So as dividend investors these days, the cool thing is that we really have options. We have options within options, even options that offer more or less the same exposure to the same underlying index. Now, some investors call me crazy for owning a small portion of JEPQ, also owning some GPIQ, and also holding on to a large amount of shares of QQQI. But this is simply because even though all three of these ETFs offer exposure at the surface to the NASDAQ, they all do so in a very different way. So now that we dug a little bit deeper into JEPQ, we talked about some of the things to maybe be concerned about, and I even shared with you guys two of my other favorite NASDAQ 100 high income ETFs. I'd lastly, most importantly, want to hear from you guys down below. Are you buying JEPQ as of right now, holding onto the shares that you have like I'm doing, or selling off your JEPQ for something better? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.